Welcome to topic 28, which is securitization. Exam focus. Securitization is the process of selling cash flow producing assets to a third party, which is also known as an SPV, which in turn issues security backed by the pool assets. Securitization are often structured with internal, example over collateralization, or external, example letter of credit enhancements. Mortgage-backed securities securitize residential mortgages where the property serves as the collateral. For the exam, be able to describe the securitization process, and you should be able to identify various internal and external credit enhancement discussed. Moving to the second part, which is the definition. So securitization is the process of selling credit sensitive assets, example debt obligation, to a third party that subsequently issues securities backed by the pool cash flows. The cash flows include principal and interest of the same underlying asset. Cash is transferred to the third selling party and the obligation is effectively removed from the seller's balance if the sale is made without recourse, which means that the sale is true cost. Hence, securitization represents an off-balance sheet transaction. Further, there exists a wide range of assets that can be securitized, example mortgages, credit card, receivables, auto loans, but the common feature is that underlying assets generate cash flows. In the process just described, it is important to note that the third party was not involved in the original transaction. The next we have participants. So, the list of participants in a typical securitization includes originator or transferor, sponsor, asset purchaser, trustee, custodian, servicer, structuring agent, underwriter, rating agency, law firm, regulatory agency, and external risk transfer and risk finance counterparties. Now, the originator is the entity that seeks to convert its credit-sensitive assets into cash or monetize the asset. The credit risk is then transferred away from the originator. The sponsor is the initiator of the securitization. If a bank wants to securitize its own loan, the bank is both the sponsor and the originator. For a non-finance company, the company may initiate a process to monetize its account receivable, so as own sponsor, or outside financial institution may initialize the process, which is known as an external sponsor. Now, asset purchaser or transferee or securitized process issuer. This refers to a third party who stands between the originator and the eventual purchaser of the securities. As the name implies, the asset purchaser literally buys assets from the originator. The transferee is a distinct legal entity from the originator. When the structure is created solely for the purpose of buying the assets, it is called an SPE or the special purpose entity. The SPE may be a company or a trust. Freddie Mac and Fannie Mac, for example, are the SPV that acts as a transferees in the mortgage market. Trustee. The trustee is charged with the fiduciary responsibility to safeguard the interest of investor who purchase the securitized products. The trustee will monitor the asset on the pre-specified condition of the asset pool as minimum credit quality and delinquency rates. Custodian. Historically, custodian role was to safeguard the physical securities, but that has evolved to also collect and distribute cash flow assets like equities and bond. Servicer. The role of servicer and custodians have blurred in recent years. They may in fact be the same party. The servicer will collect and distribute the cash from the asset pool. Structuring agent. The structuring agent is the de facto advisor for securitization issue. The agent will largely, if not entirely, responsible for security design, like maturity, desired credit rating, credit enhancement, and forecasting the interest and principal cash flows. Underwriter. The underwriter is responsible for marketing and distributing the issue. Rating agency. While there is no explicit requirement for credit rating, most issuers, particularly the high-grade tranches, will be rated by S&Ps and or Fitch. Ratings can be assigned for both the issuer and the particular issue. The law firm. Legal counsel provides invaluable advice in structuring the assets to be legally distinct from the originator. Juristical issues, proper accounting, regulatory compliance, all these are taken by the law firm. Regulator agency, depending on the asset securitized and the originator, example, regulators may be involved in the process. External risk transfer and risk finance counterparties. The securitization process itself can generate new risk. The external risk transfer is deemed necessary. Then additional counterparties may become involved in the securitization process.